5%, right? Super low. Okay, and there's no sign that it's rebounding anytime soon. So it's also not the right time to buy PayPal. Okay, unless your investment horizon is very long. Okay, you're willing to wait 10 years and your FA is very solid. You really believe that it will rebound, then fine, right? But if let's say you're not sure, okay, you don't get stuck, then there is a better way to time it, and now is not the time to buy PayPal. Okay, so essentially what we want, how do we identify a good turbo stock, right? A stock that can go up in the near future is by combining both FA momentum and technical analysis momentum. Okay, so you want it to exhibit quarter-on-quarter growth, especially for the revenue, and you also want the technical analysis to show momentum, which is measured by the regression number, right? The higher, the better. And so with these two, then you will know that there is a higher chance that the share price will go up in the short term, in the near term, because this is a short-term strategy, right? We won't know where the share price will go in the next 10 years, but we will have more confidence the share price can go higher in the next few weeks. Okay, that's all we need, right? That's all we need. Okay, so that is which stock to buy. It must exhibit both FA and TA momentum. The two hands must clap, not only one end. The next thing is, as I promised you, we need to pinpoint when is the best time to buy a stock. Okay, so this is another problem of fundamental analysis when it's used alone, right? A share price like Alibaba, right? Wow, came down. Yeah, it's undervalued. Okay, you buy. Okay, it can go down lower, right? Still cheap. Okay, it's undervalued. It's even more undervalued. Now can go down further, even more undervalued. So what is undervalued can become more undervalued and undervalued and undervalued. It can be undervalued for many, many years. And we established that just now, right? But this is another visual effect for you to see it, okay? To reiterate the point. So FA doesn't tell you, right? They tell you $200 is cheap. They will tell 180 is also cheap. 160 is also cheap. And because your value maybe is 250. So anything below this number is cheap. Okay, but it doesn't tell you, oh, at 200 you'll rebound, at 180 you'll rebound, at 160 you'll rebound. It can keep going lower. And that's what technical guys will laugh at fundamental analysis people, right? They say that, yeah, you don't catch a falling knife, okay? Your hand get bloody because you don't know where the bottom is. That's the problem, right? You don't know where the bottom is. Okay, so that is the key issue with fundamental analysis, because they give you a value, but anything below it is undervalued. Okay. So when is the best time to buy a stock, right? So now we need to understand the market structure or the price structure, not market structure, price structure of a stock. Okay, just imagine a typical stock has these 4 stages. Okay, let's start with stage 1. Stage 1 is what we call a base. Okay, the share price fluctuates, but is within a range. Right, it's within a range. Then suddenly the share price break out. Right, and then it started its uptrend. And then after that, it started to slow down and start to range bound again, forming another base. Okay, the uptrend is stage 2, and the higher base is called stage 3. So stage 1 and 3 are the same. It's just that stage 1 is at near the bottom and stage 3 is near the top. Okay, and then after that, the share price come down, right? Go below the stage 3 support, and that is what we call the stage 4. This is the decline stage. So let me ask you a question. Which stage is the best time to buy a stock? Which stage is the best time to buy a stock? Jeffrey said 1. Thomas said 1. Chi Ming said 2. Jeffrey Chong said beginning of stage 2. Kim Chu says stage 2, start of stage 2, 2, between 1 and 2. Okay, breakout from stage 1. Yes, all right, or what we call early stage 2. Of course, you don't go and buy at late stage 2, right? So early stage 2 is the best. Okay, because at the end of the day, you just want to make money, right? And to make money, you need the share price to go up. unless you're just buying for dividends. Okay, because there are only two ways the stock market can give you money, either capital gain or dividends. If you're not in there for dividends, then you need capital gain. And if you want capital gain, if you are long position, you can only make money if the share price go up. That is the universal truth, right? Nobody can debunk that. And if you go in and stage one, the problem is you don't know how long you can wait. You don't know how long you'll wait. It can be years. It can be many years, right? Like now, Alibaba is in this stage, correct? Alibaba in stage one. Agree? It's range bound, right? It's range bound. And it can be more than a year already, right? And if you buy now, there's no guarantee that the share price will eventually rebound. Okay, that means the opportunity cost. All right, buy at stage 3, right? Yes, sometimes, right, it may not immediately go to stage 4, it can still go up some more. Okay, but the chances are, the best part of the run has already been done. Okay, and definitely you don't want to buy stage 4 because stage 4 can be undervalued, correct? Like what we've seen just now. This is stage 4. If you buy in stage 4, you have a danger that you keep buying cheaper, and it depends on how deep your pocket is and how strong your heart is. Otherwise, it's going to be very painful. Okay, so you don't want to buy here. You don't want to buy here. You also don't want to buy here. So the best time to participate is stage 2, because that's where the price goes up, and that's all you care about. You go in as early as you can, and then you get out. Once stage 2 runs its course, take the money and run. Any other stages is just wasting your time. Okay, of course, stage 3 and 4, not just waste your time, waste your money as well. Okay, so the best time to participate in the stock is in its stage 2 phase, and you want to identify it as early as possible. Get in. You still need to wait because you need to wait for the share price to go up, right? But you don't wait very long. If you get in right, it should be within the next few weeks or months, and then your job is done. Okay, like a sniper, go in and go out. Okay, don't need to go and spray bullets all over the place. Stage 1, 2, 3, 4, all participate. Okay, don't need. All right, so you just know when is the best time to participate in a stock. Go in, get out. Okay, then the next thing is, how do we know when is the start of stage 2? Okay, I give you some idea. All right, there's this concept of or this technical indicator called moving average. Okay, this is a technical indicator, and I believe that those who are traders, you will know this inside out. It's probably the first indicator that you use. Those who have never used a moving average indicator before, is very simple, right? As the name suggests, it's just average. Okay, so let's say if it's like 100-day moving average, right? That means they average the past 100-day closing prices, and then they put a dot. There's a value, right? They can plot on the stock chart. There's a price to it. And then the next day, they will have a new closing day, new price on the close. And then they will discard the oldest number, take the new one, average past 100 days again, and then they have a new number, right? So you realize that average actually changes every day. Hence, it's called moving average. That's how it gets its name. Okay, so that you join all these daily moving average value together, you form a line. You form a trend. Okay, and today there are a lot of stock chart that have almost every stock chart will have moving average. Right? It's not a it's not like a secret weapon. Everybody knows it. Okay, so this is the share price, and this is the moving average. Okay, so share price can come down. This is like stage 4, this is stage 1. How do you know it's stage 2? Usually you need to break above the moving average. That is the first sign. All right, then not only that, you also want the moving average to be pointing upwards first. Okay, maybe a bit too early, right? Maybe around here. Okay, then you say, yeah, but you already rebound quite a fair bit. You actually want that, right? You want it to break high, maybe a 1-year high. Okay, it's fine because you still have a lot upside to go. Okay, don't need to care about that rebound. It can be 50% up, 100% up from the bottom, right? But you need this confirmation that stage 2 have begun. You don't go in too early, because you go in too early, later the price go down again. Then actually it's just gyrating in stage 1, and then you get trapped again. So you really want it to be confirmed that it clears stage 1, then move to in stage 2. That's where the chances of it sustaining a move is higher. Okay, give you some examples. All right, this is like Pinterest. Okay, this is stage 2, this is stage 3. Now I test you all. This is stage 1, the one I just draw. What is this stage? 4, right? You all can see, so this is your stage 1. Okay, and then you can see this breakout happen. Share price go above moving average started to point up. And then plus the momentum. This measure is 230.03%. Okay, can see, right? And then plus the fundamental momentum. Last 2 quarter Q-on-Q growth. Starting to very close to profitability. Okay, so there is real fundamental changes. Right? Plus technical confirmation. So that is what I define as a turbo stock. Okay, then that confluence of factors give you a higher probability that the share price may be on its stage 2 trend, that it can sustain a long time, right? And it has a lot of room to catch up. So that gives you a potential profits. SMA, EMA 100 or 200, I usually use SMA now. Right? It doesn't really matter. Okay, I use a combination. You can see I use more than one moving average here. There is a 200, there's a 100, right? So at least must definitely 200 is important. The 200 is a long-term trend. It must break above the 200. Okay, the 200 must be pointing upwards, right? Because if it's still pointing downwards, means it may not be done yet. Okay, so you need a confluence of factors in order for us to identify this. Okay, 50 MA can. I think anything between 50 to 200 is okay, right? But I think for long-term trend, you must have something that's longer lah. 50 is a bit short. Okay, so I do also look at crossover. Right, for example, the crossover happened here. Okay, maybe let me clean up the chart, then you can see better. So there's a few things that I look out for, right? Price go above 200 day. This was when it happened first, okay, in 2022. And there's a crossover. The blue is 100, the red is a 200 day. So the shorter one crossover, and this starting to point up. Actually, very marginal. Okay, very marginal. So, and the momentum is not very strong here. Okay, so may not be an entry. I would say the earliest entry somewhere around here. Yeah, somewhere around here, which is November last year. November 2023. That was the first signal. All right. This is just daily chart. Okay, I think weekly a bit the longer you use, okay, let's say you use a weekly chart, right? The signal will be more confirmed, but you will go in later. You will hold longer, your profit and losses will be larger. If you use a shorter intraday chart, you will have smaller profits, smaller losses, more frequent trading, and earlier signals. Okay, so it depends on how you want to use it, but typically I use daily chart. Okay, I just use daily. I don't want to complicate too many things. Okay, so you get an idea, right? So you want to go in at that sweet spot, okay, where the confluence of factors fall together, right? Coursera, okay, what is this stage? What is this stage? Practice. Oh, suddenly it looks very clear, right? The chart with all the stages, if you can map it out, you know where they are, you know whether is it a good time already. This one? Correct, 1. Okay, this one? 2, right? Okay, so now you start to look at the chart different way, right? You can map out the structure, and that will give you a much better decision-making process, right? Knowing when to avoid a stock is also important, right? When the stock is going down like that, wait lah. Okay, even if you're a value investor, maybe you don't mind holding, right? I think you wait until 1 is still safer than you buy at 4. Correct? Because 1 is the base already. It seems like it's bottom. Okay, you don't mind waiting lah. But if you mind waiting, then you wait for stage 2, then you go in. Yes, it's a bit higher, but at least you get more confirmation, right? Moving average crossover, price went above 200-day moving average starting to point up, momentum high. This was the entry point. September 23. Okay, that was the first, right? That was the first. Okay, is the trend still intact? Largely lah, still intact. Okay, we will be a pullback. Revenue, right? Quarter on quarter growth, grow. Okay. The other thing about software company is, yes, the tendency of them to have consistent revenue Q on Q growth is there. Okay, but for most other companies, right, it's very difficult to get Q on Q growth one. Okay, very difficult. All right. Yeah, for example, right, it may be non-tech company like Heritage Insurance is an old school insurance company, but it works as well. This is stage 4, right? The stage 1 like a bit only. Okay, and then it started to stage 2 climb, crossover, price go above moving average start to point up, momentum high, right? So entry around here. Okay, around $3, right? $3 to $6 double already. Okay, momentum for fundamentals, right? Revenue keep growing every single quarter. Okay, not easy for this kind of traditional business. Okay, not easy. Right, so you can see there's real recovery. It is not this price go up, it's not fluff. There is real fundamentals that's driving the share price. Okay, and hence when there's a we can see on the chart, right, there's also like earnings. Okay, you can see the share price start to bump up after the earnings. You can see that's why you see the jagged edge, right? Earnings push up, come down a bit until the next earning go up, come down a bit. Next earning go up, come down a bit. Okay. Stage 2, but exponential regression down, you wait to enter. No lah, these are still positive. These are still very high momentum. Right? It doesn't matter if it decline, it's fine. As long as it stays at a large, high positive number, it's fine. Okay. Next one, right? Another China stock. You don't say China stock cannot go up. It's not true. There are some China stock already went up already. It's just that people keep focusing on the big names, right? Alibaba, Tencent, those are the strugglers. But there are some others that actually did well. Like PDD did well. New Oriental is another one. This company got affected by the China ban of private tuition, but they recovered. Right, the business came back on track already. Okay, they didn't kill them. Share price collapse. This is stage 4. Okay, don't need to ask you all. You all can see already. This is stage 1, and this is stage 2. Okay, steady. So the more gradual that they go up is actually better. That means their trend lasts longer. If they suddenly go up like that, right, it's usually less sustainable. If they go up slowly, usually the trend is more sustainable. Okay, so that's another aspect of it. Crossover, moving going up, maybe around here. Okay. End 2022, December 2022. It has run for the past 1 year already. And it's still going up. Right? Is the indicator which incorporate volume and price movement? Is the indicator which incorporate? No, it doesn't have volume, it's just pure price. Okay. Yeah. You see, real fundamental improvement, quarter on quarter, revenue growth became profitable again. Very profitable. Right? There is real fundamental improvement even for a China company. All right, so that is essentially you now understand when is the good place to buy, right? You want that stage 2, then you will have a higher chance. If you buy in stage 1, it's a bit too early. You might have to wait a while. Go in at stage 2, let the share price go up. It's fine, right? But you get more confirmation. So it's important that at this point you realize that it's not just to buy your favorite stock, right? Because a lot of the stocks that I discussed just now may not be a stock that you are familiar with, right? You may have heard of it, but you don't really know much about the company. But when you identify those factors, you can still you can still pull the trigger. Okay, so more importantly is be agnostic, be stock agnostic, right? You don't want to buy just your favorite stocks because your favorite stocks may be not in the early stage two part. Okay, you want to hunt for other opportunities, and that may take you out of your comfort zone. Hence, you need those rules to help you identify this kind of opportunities. Okay, so next one, know when to sell. Very important, this part. As I told you, most people don't know when to sell. Okay, this is a very important thing that we must all learn together. All right. Okay, who remember this phone? Who have this phone before? Own up. Who has this before? Hey, yes. Okay. Jeffrey don't have. Goodness. That means you're very young. That this was my first phone. This was my first phone. Yeah. So I had this. You remember those days? Hey, so true, right? Yeah, I remember those days, right? The mobile phone revolution. Before this was the pager era, because although mobile phone exists like Motorola, all this, right? But they're very expensive. And most people use pager. Then suddenly this Nokia came in at a good price point, and the fees are a lot more affordable. Hence, this Nokia came about, and it really started the whole mobile phone era. Okay, and then after that, it lost its throne, right, to BlackBerry. So BlackBerry have this BBM. Before WhatsApp, right, there's this thing called BBM. Okay, so those who have used it before, lah. It's using data instead of using SMS. So this Nokia is still using SMS, right? So that's BBM is using data. Because at one point, the telco is also very smart. They charge you by SMS, right? After a certain number. If you want more, you pay more. Okay, or you buy a higher plan. So they make a lot of money from this SMS. Right? So this BlackBerry came out with that data plan, or you can actually send a lot because the data package is very small for messages. Because that many text, right? So and that also took on its life by its own. And you also have an app store. Okay, a lot of people don't know that. People think that Apple invented a lot of all these things, but actually it's not true. It was an evolution. They took the best idea and put it in a different form, right? The touchscreen form without the keypad, without the physical keypad. So they also have an app store. You can download apps into this BlackBerry, you can use it. So it became very popular because it's a lot more useful than the 2G phone, right? So it's like a 3G phone itself already. Then after that came Apple. Then Apple destroyed BlackBerry. Okay, so that is the story of that. And the thing is that if you rewind back in time, right, because all these three have stocks. Okay, Nokia, there's a stock, there's a Nokia stock. And do you believe that, right, when Nokia was at its peak, people say it's a great business. Yes, it's almost a monopoly, not say monopoly, like it's the largest market share, more than 50% market share. It has not easy, it has network effect, it has mode, it's a great business, right? Would you have imagined that analysts at that point would have said all this about Nokia? Would you have believed that whatever they said about Apple was also said about Nokia when Nokia was at its peak? Yes, no? Do you think so? It was unstoppable. You look around, everybody has Nokia, your family members all Nokia. Was it possible that analysts projected the growth rate? Wow, it's going to be blue sky all the way. How? Likely or not? Really likely or not? Wait, taking over next. We're not talking about what is taking over Apple next. I'm just rewinding back in time. Okay. So my view is that it's very likely. Same as when BlackBerry killed Nokia. Okay, they were like, wow, great business. They managed to dethrone the king. They have more than 50% market share. They have App Store, they have BBM, they have this and that. Wow, damn powerful. They're going to like, wow, discounted cash flow all the way. That kind of thing, right? It's gonna worth a lot of money. This is a good growth stock. You should just buy and hold, close your eyes. You will hear these kind of things. Same as what people talk about Apple today. The strongest brand, Warren Buffett has it, invested in it, biggest in his portfolio, charge premium, people still buy, queue overnight, right? Yeah, and I say Apple as mode will last a long time. Yeah, some do lah, but what I'm trying to say is that this kind of rosy picture has been used for many times in history, but they have all been forgotten because we only remember the survivor. That is what we call survivorship bias. So the purpose of me bringing all this out is to bring out the stocks that people forgot. They were the prime in their days, and they were the most loved stocks in their days. Okay, but people don't remember now. But I'm trying to say that not every stock that people talk about now that is good, right, is going to last forever. Yeah, I don't know whether it's Apple. Apple could be the outlier, could last forever, right? But what I'm trying to say is that maybe out of 10 stocks that analysts say good business, blah, 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 maybe 7 of them are going to die in the next 5 years, or 7 of them are going to lose their position in the next 10 years. Okay, so we're talking about survivorship bias, right? Because 10 years later, people only remember 3 out of 10 that survived. The 7 that they say are good that didn't survive, people forgot about them. Okay, so that is the problem with long-term investing, because a lot of all these lessons were not learned because they were all forgotten by generations. This is what Nokia stock looked like. And a lot of people say, oh, hold long term, no problem, one, buy and hold, right? The share price went from, okay, we start from here, this line, $3 all the way to $38. Got 10x, got more than 10x. Okay, 1997 to 2001, 4 years, 10x. Okay, what if you don't sell? You write this all the way down, stage 2, stage 4, stage 4 some more, stage 1. How? Stage 1 for how long? Since 2013 until now, end of 2023 lah. 10 years. 10 years share price going nowhere. Okay. What if you buy here $3 plus? You buy from 1997, you hold until now. How many years is that? 26 years. 26 years, you're back to square one. Right? Buy and hold, right? People tell you buy and hold works, right? Okay. They keep saying, oh, time in the market is more important than the timing the market. You cannot time the market. Forgot the lesson. Right? Only largely work for index, doesn't work for individual stock. Okay, a lot of stocks have died in the past 10 years. People don't remember. Okay, there's always a hottest stock or the hottest handful of stocks every year or every few years. Okay, this is Nokia. Right? If you buy and hold, you got a 10x, it didn't sell, you're back to square one, even after 26 years. How about BlackBerry? Same story, right? It came later because Nokia demise was BlackBerry's gain. 2007 was the rise, right? Share price from about $20 to $150. Okay, this one don't have 10x, 7x. 7x in 1 year. Wow, 7x in 1 year. Okay, then crash all the way, Right? If you bought at $20, you don't sell, today it's $3.65. You hold from 2007 to 2023 because you long-term investor, because you believe BlackBerry then was the future. That is 16 years. You lost more than 50%. Right? Buy and hold only for stocks that give high dividend yield on historical costs. Then they also, how do you all remember some of the stocks, like just now I mentioned, right? Hong Kong Land. Dividend also not bad, what? 5+%. If you could buy at lower price, can even 7-8%. After 10 years, you still down 18% after factoring dividends. How? Can dividends solve the problem? Cannot. Okay, cannot. Right? I'm not saying dividend stocks don't work. I'm saying that not all dividend stocks work. Okay, some of them won't work. But again, people don't talk about them. People forgot about them. Okay. My point here is that we need to know when to sell. That's the most important lesson, right? We don't want to be holding a bag. We don't want to be like getting in the wrong price, then get to hold it and waiting for a long time, because all these are opportunity costs. Okay. So there are a lot of survivorship bias, as I said. In fact, majority of the stocks don't work out. Okay, majority of stocks don't work out. So which means you need to sell. More than half of the stocks don't do better than treasury bill interest. And for a long time, treasury bill interest was so low, like zero, close to 0%. And yet many stocks cannot beat that treasury bill stocks, more than half of them. Okay, so the chances of picking a wrong stock, right, is more than half of the time. And that's how serious it is. Hence, we need to be more stringent with the picks, and we need to know when to sell. Right? Citigroup, a lot of people's story that, oh, you can buy Citigroup less than $1 during the great financial crisis. Then you make a lot of money, right? But in the last 10 years, it has gone nowhere. Okay. 40%, probably less than 4% per year. Right? 3M up 17% for 10 years, which this one is also a dividend aristocrat. Every year give higher dividend, right? Divide by that is less than 2% per year. Gap, this is a fashion wear, right? Down 25% in 10 years. Okay, and these are brands that people know. It's just that they are not so popular as a stock right now. People don't talk about them, but you can see that even giving them 10 years, right, it doesn't solve the problem. It doesn't solve the underperformance. Okay. Hence, buy and hold, you need to be really, really good at picking. Like Buffett, he's really very good, right? That's why he has that track record. Okay. Otherwise, it's very hard, right? It just hit and misses. So which means you need to correct your mistake. You need to correct your course along the way. Okay. Another example of C, right? Went so high, $360. Parent on Shopee. Now it's like below $50. Okay. This is what stage 2, right? Yes, if you get to participate this stage, good. But you need to sell. Because you don't sell, $360 drop to $50. Okay? Even if you buy at say $50, at 360 you don't sell, or even at 300 you don't sell, right? You'll feel very painful, right? Hey, I could have made how many 6x 6x right? Right? Rather than let it go. Okay. So learning how to sell is very important, because we won't be able to pick 100% correct stocks. You will make mistakes along the way. And even if you got the right one, you also need to know when to sell, because otherwise they collapse, the price collapse, right? You might never go back to that high ever again. Right? Like Citigroup never. Okay. A lot of other stocks don't have. And the other thing that I want to talk about opportunity cost is that you also don't want to buy a long-term stock that only you realize that you're wrong 10 years later. Right? How many 10 years does an investor have? Okay, if you want to recognize your mistake, you want to find out as soon as possible. Okay, don't want to be wrong for so long. Okay, so learning to sell is very, very critical. So now, when do you sell? Okay, so now let me share with you one technique. Again, we use the moving average. Of course, there are a few techniques that you can optimize the selling point, but let me just share with you one today. When the share price after stage 2 is done, right, or even stage 3, doesn't matter. When the price go below the moving average, you sell. Okay, because when the price go below moving average, there is always a chance that the trend has reversed. Okay, it might be moving into stage 4. Okay, sometimes it can be, yeah, you sell because the price went below and the price rebound and then go up higher. Yes, possible, so be it. But you don't want to take your chance. You don't want to test your luck I said, never mind, I think it'll rebound. Then after that, you go down, 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 stage 4, complete its cost. Then you realize, yeah, I cannot sell already. Because if you can't sell here, you won't sell anything below it. Okay, then you get trapped. Right? So psychologically, that's how humans behave. Okay, we cannot rewire ourselves. Okay, so the best is to prevent such situation from happening to us in the first place. Okay, so that's the simple principle. When the price go below moving average, we sell. Okay, so give you example. Right, it doesn't matter you use 100-day, 200-day. Just for these examples, I will just use 200-day moving average. This is 200-day moving average, the red line. So if the price go below the red line, you sell. In this case, it's $280. Now it's $35. Then you have protected your profit if you manage to get in earlier than 280. If you get in higher than 280, at least you limit your losses. Okay. PayPal, same thing. The selling point was here. If you follow just this simple rule, right? After stage 2 done, the red line is a 200-day average, you'll sell at 265. Today is $61. Okay, that if you buy at 265, okay, that is more than a 50% loss. All right. If you bought earlier, you sell here, you still can capture some profits. Okay. ST louder, the red line cross here, this will be a $310. You will get out. Now it's 134. Okay. And some of these stocks, if let's say you go stage 2 again, can buy or not? Can buy or not? How? If let's say eventually you go to stage 2, can buy or not? Must look at FA, all these are, yeah lah, correct lah. All the factors I talked about. Can, right? Okay, so you escape this entire stage 4, good or not? Yeah, I'm not interested. Right, like what I said, all you want is stage 2. All you want is to participate in stage 2. I don't care. You are stage 4, I'm not interested. You're in stage 3, I'm not interested. You're stage 1, I'm not interested. When you're here, then we talk. When you're end of your life, I'm gonna get out. I don't care. You can go down as much as you want. I don't care anymore. In fact, I want you to go down a lot more so that the next time you come out, I have a lot more meat to take another profit again. Okay, to continue and run again. Okay, because only stage 2 makes money. The rest of the stages waste time, waste money. Okay. I even say, why not sell earlier? Sell here. Sell here. We only know the top after the trend goes down. Right. Yeah. Because if you sell early, right, could you have sold here? Then you miss out this run, no? Until here, this run. Correct? So there are other selling techniques. I'm not saying that you must use this, but I'm saying that this is the last point you must sell already. Last opportunity to sell already. If you pass this, right, good luck to you. Okay, you can sell earlier. There are some other techniques that you can sell earlier. But you might even not sell here. You sell maybe somewhere around earlier. But this is the drop dead point. The point of no return. Okay, any stock that drop below 200-day moving average is very serious. Okay, very likely the trend is done. Can see? The moment it break this red line, it's very ugly. All right? Can So that's just the simple idea. And maybe test you. How? See, is it what stage is it at right now? Is it a time to buy? Cheap leh, last time 360 Now 35 leh. Cheap leh. Can buy or not? Can buy or not? Stage 1, right? Can see, right? This is stage 1, right? So even for you realize, right, even for if you want to do this for long-term investing, you also can, right? Understand the big stages. I can help you time better and not get capital stuck. Okay, not the right time lah. Okay. How about PayPal? Now just now we discussed already. How about ST Louder? Stage what? This one that's you. Stage what? ST Louder in which stage? Kim Chiu say 1, the rest say 4. You shall say 3. Likely 3 lah. It can be 4 or 1 lah, but it looks more like 4 lah, right? It seems like it's not done yet. Okay, it hasn't formed the base yet. It could be a start of a base, but we don't know yet. Right? It can also continue to go down lower. Okay, definitely not the right time to buy, right? But fundamental analysis can tell you that it's cheap, right? It can tell you undervalued. Possible, right? So you can see that it's this danger that it can still fall down more. It's safer that it form the base first. Now, like I would say, yes, you can buy stage 1 if you are more long-term investor. You don't mind waiting. You can collect, at least you wait for the base to form first. Right? Then if that's the case, then PayPal, see you can buy. Right? But there's no guarantee that share price will rebound anytime soon. Okay. So essentially, a turbo stock now got more definition, right? It must have FA momentum, the revenue Q-on-Q growth. You need to have regression number being high enough so that you exhibit your price momentum. You must buy at early stage 2 and you must complete it by exiting and sell when the trend reverses, which means break below the moving average. Right? That's the last point that you must sell already. Okay, so once you have this, then you have a complete process and you just rinse and repeat. Find the next turbo stock, buy, sell, buy, sell, buy, sell, buy, sell. So keep your portfolio always in this kind of turbo stocks. Right? In stage 2, that is the best chance for you to make money. Okay, any other stages, there's no guarantee, and you might have to wait longer. Chances are, 3 and 4 are very risky. Actually, 4 is the worst, right? Because you can also lose money very fast, right? Because when it's downtrending, it can also have a negative momentum. It can cool down a lot in a very short time. Because there's a saying, right? Bulls take the stairs, bear jump down the window. Okay, so stage 4 is actually very dangerous to buy stocks, right? You might lose money very, very fast. Okay, the moment you buy next week, drop another 10%. Right? Not a very good feeling. Okay, so by understanding this big structure and these factors, that is how you can increase your chances of finding a stock that can move up in the short term. Okay, so maybe we look at a few, right? Kim Chiu say, I fast in which stage? Okay, you all tell me, I fast in which stage? Larger, make it larger for you. Come, tell me, which stage is I fast? How? Don't know. Difficult. You can see the chart, right? Yeah, you can see the chart. Oops. How? Suddenly don't know how to see already. Okay, I see the answer. Sorry. 2 2 N2 2 late stage 3 late 2 to early 3. Okay. Yeah, there's a bit of subjectivity lah, right? But usually the stages are bigger trend lah. Okay, so this is clearly the previous stage 2, right? And there's a bit of 3 here. If it's difficult, you can always like draw the trend lines. So there's a bit of 1 here. I think the 2 started here, but it didn't manage to break. Okay, so it went back to like 1 again. Then after that, this is 2. Okay. It's hard to tell whether this is late stage 2 or early 2. Right? I don't think this is 3 lah. It doesn't look like 3. 3 you need to maybe wait for every more weeks and months to see. It can break high, right? It can break this high, it's possible. It can form another long stage 2 here, it's possible. Okay, it can also be a resistance, right? It can test this and come back, sometimes pierce through a bit and come down, right? It's also possible. Okay, definitely around this all-time high, right? There will be reaction one, right? Very few stock pierce through all the way. Of course, if pierce through all the way is very strong. Many will just touch it, come down, or go up a bit, come down. Okay. Yeah. So you can say that it's definitely not as early as before. Right? It's definitely not as early as before. Okay. Eraser, how to clear? Clear all my drawing. Okay. Okay. Right. How? Maybe two more stocks that you all want to practice? Two more stocks? Two more stocks? No? Okay. Fastest finger, Yang Zhejiang and Amazon. Okay. Yang Zhejiang. Zhejiang. What's the ticker? Anyone know the ticker? I cannot find the ticker. Oh, BS6. How? Stage what? Stage what? Stage 2, correct? Still in trend. But I can see the momentum slowing down, testing the 200-day a lot more. Right? Look like late stage 2 already. Okay? Look like late stage 2. But another lesson you can learn is that it can run very long. This trend run for at least 2 years already. Okay, at least 2 years. Amazon? Amazon? How? 2? Yeah, also 2 lah. Okay. But same principle, it is not far from the high. Right? There should be reaction if we manage to go to the high. Okay, 187. Right. Still have meat, but it's definitely not as early as you would like. The earliest point you probably would have got in was around here. Here. Okay, what is this price? Around here. 120? Sorry. 130. Around 130. That was probably the earliest point. Okay, you can see a lot of all these well-known stock, the pullback, the correction is not as deep. Then the mid also not as much. It must break the previous high, then the mid will be substantial. Okay, yeah. DBS, what is? Okay, ignore this one. Look like what? Look like stage 3 to me. Right, range bound for a long time. Okay, looks more like stage 3. Okay. You're going to practice, Yeah, you're going to practice. You're now at least learn. We don't have time to go through every single stock. Okay, let's go back to our material. Right. At least now you understand the principle and hopefully you know where I'm coming from. Right. I'm not against long-term investing. As I said, I also do long-term investing, but I think for a lot of investors, there's a better way to do things, right? Because people may not know, right? Long-term investing can be risky as well. Right? If you pick the wrong one, you hold long term, right? You will have a lot of opportunity costs incurred. And that's not a very good situation to be in now. Okay. If you buy index, your problem is less, but you buy individual stock, the long-term punishment can be even worse than short-term trading, in my point of view. Right? Even though a lot of people keep saying that long term is safer, right? It is not lah. Okay, let me let me tell you the truth. It is not. Okay, long-term investing is as risky as short-term trading. It's the same. Right. So might as well you manage your risk, increase your chances of making money, right? And definitely it's actually easier to not say predict, but to tell where the share price have a higher chance to go in the short term than in the long term. Okay, people may disagree with me lah, but that is based on my experience. I feel that it is important that we stack up the chances. Right? How is your strategy different from Weinstein? It's different. Weinstein only talk about the stages, ma. Okay, yeah, he never talk about the FA momentum. He never talk about the technical analysis momentum. Right, so I added in more things. Right, I combine his structure right with a lot more details. Okay, his is more big picture lah. Right, he's more big picture trading. He doesn't really talk about the details. Okay, he's actually not that short term. It's more like a swing trade. Okay, so the execution and the rules are very, very different. All right, because I need to tick more boxes. I need to tick more boxes to buy the stocks. It's not just stage 2 buy, right? That you realize when we first started, we talked about Q-on-Q revenue growth, right? We talked about it must have enough exponential regression. Then we talk about the structure. Okay, but even the exact execution is a bit different. Okay, so I would say I took 10% of his method, right, into this. Okay. Yeah. Can I? Okay, these are some examples of turbo stock so that you get a bit more idea. Right, this is Symbiotic. This is very interesting. They do the warehouse logistic robots, and Walmart is a big customer. Right, so I bought this last year May around $28. Then I sold around 37.51. Okay. Now you realize that I don't simply use the moving average. Right, there are other selling technique to optimize the profit. Right, so that was a 33% in 40 days. Okay, don't need to wait 1 year. Right, then you take the capital, you can move on to something else. So you try to compound that winning as much as you can. Right, so instead of compounding your money using years, right, try to compound your money using weeks or months. Okay. Heritage Insurance, this one is the one that I talked about just now. Right, bought this 17 October last year, sold December. Okay, this was a 62% in 51 days. Right, then after that they announced a rights issue lah, or they call it a share issuance in US. That shows you that even the management believe the share price is overvalued. Okay, yeah, but got out before that happens. Singapore stock, this is a crane company, and this one was also short 18 days within June, the same month itself. That was a 44% in 18 days. Okay. This is a Hong Kong listed stock, right? This one held a bit longer lah, but then it start to like just range bound. It must always wait for the earnings period. Yeah, when there's a earnings, then the share price go up. When there's a earnings, then the share price go up. And in between, the earnings never go up. Don't worry about it because the liquidity a bit low lah. Okay, yeah, so I tired of waiting already. That was a 23% in 184 days. Okay, nothing wrong with the stock, just that I think it's a bit too long. Nothing to do in between the earnings. And this another one, Elastic. This was more recent, bought November, sold December. Right, there was a gap up. Okay, because of earnings surprise. As I told you, because you have the fundamental momentum going for you, right? There's a higher chance you can see there's a gap up. Right, there's an earnings, there's a gap up. Okay, can see? Yeah. Stan Weinstein didn't talk about this. Yeah. So to increase your chances, because sometimes, right, when they announce results, right, you very scared one, right? Wow, bad result, the share price can tank. And a lot of people, they tend to sell just before the earnings, okay, because they scared that bad result. So with this revenue momentum, right, this fundamental momentum, your chances of earnings spike is higher. Can see? During earnings, it jump up. During earnings, it jump up. This is also another gap out. Earnings, okay, this one don't have, this one came down. This is here, this not, this one jump up. Okay, this one jump up, you can see? All right, hence that is the element that increase your chance, okay, rather than just relying on technical analysis itself. And you realize that the best short-term fundamental indicator is fundamental momentum, right? They have Q on Q momentum to grow. Then the next earnings, they beat expectation again, share price jump up. So you have this gap up for you. Not foolproof lah. Sometimes it can still come down, right? If the results not good, but chances are you get a positive surprise is much more than the negative surprise. Okay, so then you have that confidence that you will actually like earnings days. Right? Like for example, the earnings season is coming already. The banks just had a result last week. Big tech probably 1-2 weeks from now, probably 2 weeks from now. Yeah, around end Jan, early Feb, that period, right, is the earnings season for the last year's FY23 results, the final quarter. Okay, so there will be a lot of all these activities going. Right, so one of the key thing about turbo stock is also that you want to catch this earnings season because they provide some of these gap ups. Okay, yeah, but we don't invest solely or we don't trade basically based on this earnings seasons. Okay, yeah, but we just want everything to be in our favor as much as possible. Okay. So there is a lot to unpack, right? I try to give you the broad picture. I try to show you the key points. Definitely, you can use some of those ideas that I've shared with you. But if you really want to go deeper into it and you're very interested to trade these turbo stocks, like this, there's a program that I can share with you here. So there's a turbo stock trading program. Right? It starts with a course, 3 days. We will cover the details, all the rules, all the things that you need to take note of to execute this strategy. As I said, there are some nuances. Like for example, the selling is not just moving average. There are some other things that you want to take note of to sell earlier before it goes below the moving average. So there are some telltale signs that we can use. So day one is about the more technical aspect. Day two is about the fundamental aspect, right? How do you get the data? How do you put all these things together? And day three is about how do you size your position? How many stocks should you have? When do you sell? And what are the bigger macro impact that you need to have, right? So the other thing that I mentioned is that the macro has a lot of impact the individual stock. That means the overall stock market and sentiment, right? If the sentiment is bad, right, the effect of an individual stock going up will be diminished. Okay, so there are also a lot of other things you need to take note of. Right, so the course will cover every aspect of it. So this is the program. The first part is the course, and there are bonuses. And the first one is this fundamental momentum template. Right, this is something. It's just Excel spreadsheet, but it has a formula. Because we look at a few things, right? Revenue Q on Q, EPS Q on Q. So there is a way to fish out these stocks with fundamental momentum, right? So it becomes a watch list, right? For us to know which are the stocks that we need to watch, and then we can take note of what we want to trade, right? There's definitely a lot more stocks to look at, and I'll teach you how to get the fundamental data. Right, where to get a free fundamental data, you just need to copy paste into the template. You will have this watch list for yourself, and you will know what are the potential turbo stocks that are about to run. Okay, then second is the technical momentum list. Okay, because you also need to have technical momentum, right? Not just fundamental momentum. You want those that have this strength to go up. And for example, the New Oriental education was found via this technical momentum. Okay, and periodically I will share with you this list, right? Because there is no free software in the market right now. There is a paid software, but I will just give you these trade ideas, right, periodically, and you can just screen through them and see which are the ones that have that technical momentum. Then it's confirmed whether they're fundamental momentum. Then you can form that turbo trade signal. Okay. So bonus number 3 is stock ideas. All right. Once you complete the course, you will be added to this closed secret Facebook group. Right. That's where I will share the ideas, which I see, and you can see some of the things that I say. Okay, some of these stocks are going to enter earnings dates. Right. Potential pop. And if you want to load out the position, you can, because the macro environment was also still good in August. Right. So these were the list. And this was another one, right? Still maintaining uptrend during the bear. I think there was a bit of correction in September, October period last year, right? If you recall. Then after that, this is the fundamental part, right? I keep giving ideas lah, list and list and list. So it's easy for you. You don't need to go and hunt from scratch, right? Which even in the US is 5,000 stocks. As you can see, the turbo stock don't just go for US, right? Just that predominantly the US stocks are better, more liquid, share price get pushed up a lot more, earning seasons a lot more volatile, right? Compared to say Asian stocks, right? Asian stocks are relatively more boring, okay, but there are also opportunities, like I mentioned just now, just less. So you get some of these stock ideas. Okay, there's also trade signals. Okay, so I also will share what are the stocks that I buy, right, and sell as well. Okay, so these are some. That was in November, started buying again. November was the recovery. All right. I think this is eighth point, cybersecurity company. All right. And this was Vertex. Okay, so this was 8 November, Vertex, and this was the 8 November, right? This was the next day because earning season. Okay. This one I deliberately buy because I know next day is going to have a earnings result. And I say good chance for earnings beat because most quarter have Q on Q revenue growth, right? So you can see this pop up 16%, 15% the next day, right? 9 November. Okay. So that is how these ideas get shared, right? These buy alerts as well. So I also will share the stocks that I have. Okay, but this changes very fast. This was November. Most of them change over already. Okay, so they also say looking to buy what. Okay, can and this was new. Okay, this was also 9 November. Earning release, this, right? So this was also trying to catch it. And these are the ones that I sold, right? So for 2% loss, why I sell, okay, regression negative, all these kind of things. Okay, and then this is a macro, right? Early October, market was still downtrend. I say play safe, close all position first, right? Yeah. So then these are the group of stocks that I cleared everything. I think I left two, which are Asian stocks, which also impacted. Okay, so that is a trade signal. Then 5 is a lifetime membership, right? Which means you join this secret Facebook group. Once you join this program, you join for life. There is no recurring fee, there's no subscription fee that you need to pay. Right? So you get a lot of all this, like the template is there for you to use. Okay, the list periodically you get it. The stock ideas that I share, you can definitely dive in from there. The trade signals, the buy and sells, you can also take reference, and all these are for life, right? So there's no renewal that we're talking about. Okay, so if you are interested, right, this turbo stock trading, I hope it has given you a very new perspective to the markets. I find that it's a lot more you feel a lot more in control, basically, right? Because you have a lot of factors going for you. There's a method, there's a steps that you need to do, right, to find all these ideas. And I'm also giving you a lot of ideas from here, so you don't start from scratch, right? The next run is in why this one is December? No, on Jan. Forgot to change the month. Okay, so it's end Jan, and these are the 3 dates, right? Before Chinese New Year, 2 weeks before Chinese New Year. Okay, so you can start the new year right, especially you have a New Year resolution, you want to do better with your investment, you want to learn something this year, right? So this course starts right in January. Okay, and talking about the, oh, sorry, it's February. See, I blur already. It just told me it's February 24, 26, 27 Feb. So the date is correct, it's the month that's not correct. Okay. Thanks for the error. Okay. So take note, it's February, right? Still early part of the year. Okay. So until Chinese New Year, nothing to do. Clean your house, okay? Get ready your portfolio, then February should start. Right? Still in time for the rest of the year. And the investment for this program, right? Usually, typically, this kind of trading cost is 4,000, 5,000, very, very usual price, right? But I give you offer 3,800. But because we are starting this program, we just had the first course run last year. All right. So I want to offer the initial few batches, very good price. All right. So it's going to be just 1,998. No recurring fee. You join us for life. You get endless ideas. You get to hone your trading skills over time. All right. So I think it's a very good offer for a very new perspective towards the market, combining a lot of all the good elements together for for a strategy. Okay. So, excuse me, the running out of voice already, telling me to stop. So you just need to leave your contact, right? There's a link in the comment box. You can click on it. You can leave your contact. We will get back to you tomorrow or so. Of course, if you are very keen, you want to secure the seats, then you can let us know, right? So we'll contact you earlier. Okay, so this is the good offer, right? We haven't decided how long we're going to run this promo, right? Because we intend to increase the price going forward, right? Just the first few batches, we are offering this special price, right? So do take that advantage, capture the opportunity, right? For this strategy. Okay. Thank you very much. No, it's a webinar. It's live webinar. Okay, it's a live webinar. Right? 3 sessions. In fact, I always find that for trading course, because we look at a lot of charts, right? It's better to do online because you get to see the chart in very clear detail. The problem with physical, right? When I teach this kind of charts, it's very challenging because the people who sit at the back, right, will find that very hard to see, very small. Okay, so I always prefer trading course we do online, right? So you can see the full screen of the chart, okay? Rather than in a class, very small. Fundamental is different. Fundamental, I prefer to do in person because you can look at the printout of financial statements a lot better. All right. If you have any question, you can always leave your contact first, right? Regarding the exact dates, the requirements, some special treatment, whatever. You just leave your contact, then ask our friendly staff, right? We'll get back to you. Okay. So just leave your contact and no worries. We will get back to you and hopefully you find this refreshing and most importantly, you get some ideas that you can use. Some of the important principles I share because a lot of all these things is based on my personal experience and I try to improve things. Right. So this is really culminating many years of experience that I came out with this. I'm of course not 100% original. Is I also learn from a lot of other people how to do things better, but based on experience, I would filter what works, what don't work. Right. So this is something that I'm excited to share with you. Hopefully you can see how it can fit into your own investment. Hope to see you in the program. All right. Thank you very much. Good night.